makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Dubai with the special coverage this hour from the 28th UN Climate Change Conference. We are day 5. Now, in just a moment, we'll be joined by Hubert Keller, Senior Managing Partner at Lombard Odier, and later this hour, we'll also talk to the Apollo co-president, Scott Kleinman. Now, there has been a lot going on here at COP today. We're also at the Green Summit, which is about an hour away from COP28, but it's really the focus today on the energy industry. Now, talks likely to get complicated for the final communique after Saudi Arabia said it will not agree to a phase down of fossil fuel use. Now, the phase down or phase out of dirty energy is a key demand of many countries, including the US and the EU, but any agreement must actually be supported unanimously. Now, COP28 has had some early successes, though. More than 120 countries have committed to triple global renewables capacity by the end of the decade. Rich states have also promised hundreds of millions of dollars to compensate poor nations for the effects of climate change. So to put all of this into context and look at climate financing, joining us now, Hubert Keller, who leads Lombard Odier's also efforts on sustainable investments. Hubert, thank you so much for joining us. Now, what you're trying to do at the firm is extremely interesting because you're putting climate into almost every model because you believe there's going to be a big shift. Talk me through it.
That's exactly right. So you see, we are an investment firm. We are an active investment firm. And for some years now, we decided to put effectively sustainability and more specifically the environmental transition at the heart of our investment conviction. So that's why we're very focused on it.
So first of all, how do you measure that risk? So this is all about risk, right? You talk in financial terms.
It's about risk, but frankly, it's even more about returns. The way we see it is that we are at the beginning of the most profound economic transformation of all time. I think what is underestimated by the markets is the speed and scale at which this transition is unfolding, and it's the level of disruption that it is creating in the real economy. So, as an investment firm, we want to be focused on the business models of the future, and we indeed want to try to move more and more rapidly away from the business models of the past.
But it's quite actually rare to have someone say that this will be accelerated. So are you expecting in the next couple of years to be at escape velocity, meaning once you get enough funds, the transition kind of, goes off?
So I think we have to make a distinction between what's happening in financial markets and what's happening in the real economy. In the real economy, things are happening at speed and scale. You have to remember that when you think about the environmental transition, 90% of the solutions already exist. Some of them have passed breakthrough points and are moving at speed and scale. If you think about the building block of electrification or electrification generally, we are in the process of electrifying the supply side and the demand side of our energy system. It is happening at a speed and a scale which is vastly underestimated.
So where do you think the smart money is going, if you look at some of the projects or where you want to be invested in?
So you see, we are a multi-asset organization. We look after about $300 billion of assets for our clients, and we need to be able to deploy capital across all asset classes. And so we need to find opportunities on the transition, on the environmental transition across multiple asset classes. So yes, there are some really interesting solutions in private markets, but there are also some really interesting opportunities in public markets. And remember, the transition isn't just going to be about the tiny little new solutions. The transition is going to be about the big incumbents shifting, and it's also going to be about the new Tesla of this world.
And this is across the globe, or are there regions? Again, we have the Inflation Reduction Act. That, of course, helps with innovation. It brings, the price of renewables down. So do you favor the U.S. over other regions? So
I think I think in developed economies, the electrification of the economy is really moving fast. I think there are questions still around emerging markets and developing economies, undoubtedly. I think the big topic for developing economies is the nature agenda. And I think we as an investment firm, we would, for example, think that nature is going to become a really big asset class. We actually potentially think it's going to be like global real estate. So it's going to be really interesting. But I think, there are indeed slightly different perspectives, whether you are living the economic reality in developed economies or in emerging economies.
What have you found most interesting at COP28? Is there a pool of private capital that just wants to be used waiting for the right project?
I think when we're talking about financing the transition, we really always need to, come back to something really important. The green economy, or building a green economy, is basically about building a better economic system. When this becomes clear, capital is flowing and flowing rapidly. And the capital is coming from corporates. We, as financial investors, we are going to invest in corporates that are making the right investment for the future and are going to be able to drive growth and profit from that new green economy. And I think that's always very important to bear in mind. So we think, for example, just in electrification, we are on course this decade alone to spend annually between 3 and 3.5 trillion in electrifying our economy. So these start to be really big numbers, and we're seeing it happening in reality.
So, and what you're saying about is that this will happen no matter what. So, we worry politically, we worry about not enough regulation, not enough compulsory things.
So I think this is a really good question. There are parts of the transition that continue to need policy support and intervention, but frankly, there are parts of the transition that now are moving firmly towards mass adoption. And frankly, they are because, again, these are just better technologies and they're going to build better economic systems. I think it's quite important that we realize that. What is underestimated by the market is the level of disruption that it is creating in the very structure of our GDP. We've seen it, for example, with electrical vehicles. When better economic systems emerge, effectively you have entire systems that are changing, you have value chains that are getting reconfigured very, very quickly, and you have profit pools shifting from one place to another, margins, moving left, right, and center. So it is from an investment perspective, it's really important to understand all of that.
So does it matter? We're focusing a lot on, the energy transition, and the fact that maybe the phasing out or phasing, off of fossil fuel will not end up in the final communique. Does that matter to you as an investor?
As an investment firm, not really. I'll tell you what really matters from an investment perspective around big oil companies is the fact that they are basically not willing to engage with their shareholders on the future of their business model. We believe we're going to move towards electrical vehicles, 60 to 70%, even more, 80% between now and 2030. This is huge. A world of electrical vehicles takes 45 million barrels of oil every year from the demand. That's nearly 50%. So why can't we have a conversation as shareholders, as investors, with this big oil business saying, what is the future of your business?
Are there any other points of innovation that you're very focused on? I don't know whether it's carbon capture, whether it's some of the new things, nuclear fusion. I mean, would you invest in nuclear fusion now, or it could be 20 or 30 years away?
Look, our view is relatively simple. We're moving towards a world that is going to be electrified. And the cheapest source of electricity today on the planet is solar, wind, and batteries. This is the cheapest by far, and costs are continuing to go down. And that's really good news, by the way. So yes, there will be other technology possibly emerging, but at scale, to the extent that we're seeing with solar, wind, and batteries, I think we're going to need to wait much longer.
When you talk about energy companies and fossil fuel, having that discussion with shareholders, do you think at some point there will be almost a mandatory disclosure for all companies to look at the risk of climate change longer term?
I don't know, but you know what? As an investor, at some point, I'm going to ask, why should I discount to anything but zero the capex going into a new fossil fuel project? And then you open the question of, okay, so how do you value the rest of the business?
And do you think more asset managers will look at doing that?
I think this is a little bit of a normal question to ask. Big oils, in a world where the demand of oil is shrinking and shrinking rapidly, they have a business model issue, which for some reason which I do not quite understand, they are not willing to address.
Hubert, thank you so much for joining us. Hubert Keller there of Lombard Odier Group. Now, we'll have plenty more, of course, throughout the day here at COP28. There's a blue zone. I'm actually at the Green Summit of Bloomberg. We'll also bring you our interview with the chief executive of Total Energy, Patrick Pouyanné. He says high oil prices are actually good for climate change. So we'll have plenty more on that interview next. This is Bloomberg. The conversations that matter, the insights you need. This is a Pulse, and I'm Francine Lacqua here in Dubai from COP28. Now, Saudi Arabia's energy minister says the kingdom will not agree to any COP28 text that calls for the phase down of fossil fuels. In an exclusive interview, Abdulaziz bin Salman told our very own Will Kennedy that if countries believe they can reduce hydrocarbon use, they should just get on with it.
I'm not naming names, but it's their choice. If they see that we should phase out and phase down hydrocarbon or hydrocarbon, I don't care about fossil fuel, I care about hydrocarbon. If they do, please, I did once in the FII, just the last FII, I said, please, those countries who really believe on phasing out and phasing down hydrocarbons, you should come out and put together a plan for how starting 1st of January 2024, when are they going to freeze? Well, they should at least freeze their production by January 24, and also put together a plan for when that descendance or phasing out will happen.
You mentioned this phase out, 500 miles from here in Dubai. Mm-hmm. Many thousands of people are doing the annual climate summit, and one of the issues there is this language which we discussed actually last year about whether that text agreed to by almost every country in the world should say fossil fuels should be phased down. Are you happy to have that language in the text this time?
Absolutely not. And I assure you, not a single person in that, well, I'm talking about government, do believe in that.
Okay.
But if they believe in it, I would like to put that challenge for all of those who believe, who comes out publicly by saying we have to do that. Please give me their name and numbers and look at it. Well, I'll give you their name and number, call them and ask them how they are going to execute that effective January 24. If they believe that this is the highest moral ground issue, fantastic. Let them do that themselves, and we will see how much they can deliver, if they can deliver.
Well, that was the Saudi Energy Minister Abdulaziz bin Salman saying the kingdom will not agree to a text that calls for the phase down of fossil fuels at the COP28 summit here in Dubai. Now, it is one of the key demands of many parties at COP, including the US and the EU. Now, he also told us that oil production cuts by the OPEC Plus alliance can absolutely continue past the first quarter if needed in order to stabilize prices. That was the Saudi oil minister. Now, we also spoke to the chief executive of the French oil major, Total Energy, saying high oil prices are good for the climate. That's what he told our Youssef Kamaldin on the sidelines of COP28 in Dubai. Here's Patrick Pouyanné, who also argued that carbon offsets are part of the solution to fight climate change.
Glass is half full or half empty. I think, honestly, what has been done, putting together more than 50 companies around the platform with clear commitments of Scope 1 and 2, which means the emissions of the oil and gas industry. You know, the emissions of the oil and gas industry represent 10% of the emissions today, 5 billion tons. So it's at stake. And I think putting that together, and in particular the big step forward has been to engage national oil companies from many countries, which was today a little behind, you know. They are now on the same platforms.
Let me build that out a little bit, just in terms of CCUS, because a lot of people are saying that this is a way for big oil to avoid fighting climate change. What do you say to those who are saying there are mounting doubts about carbon offset?
No, I think it's part of the solution. You know, by the way, when you speak about CCUS, there are different things there. You capture, U is use, transforming CO2 as a material, which I think is probably one of the future. S is storage. It's not the solution, it's part of the solution. But you know, when you are a cement industry, it's not for oil and gas, it's the cement industry. what do? You need to do with cements, you need carbon. What do you do with the emission? You need to capture them and to do something with CO2. So I think it's part of the solution, not the solution. It's not the oil and gas industry, which is reintroducing bad technology. It's because of the hard-to-abate industries, cement, aluminium. But again, it's one solution.
Are you seeing a softening in demand?
I'm not sure. No, I think this year there was an increase in 23 of +2. Next year is +1. So it's still growing. Why is the demand is growing? Because the population is growing. So it's not +2 was quite a big step, because in the +2 of this year, you had part of it was a recovery of China compared to the year before. In fact, the oil demand, when you look, is growing by 1% per year. So it's +1. So then, of course, you have the global economy, macroeconomy, which could have there. So the softening of demand is not the same hike, but it's still a hike in 2024. So we need to continue to supply.
I mean, the thing is, because of that growing supply, Citi, for example, in a new note suggests that the prices could go down to $70 a barrel by end 2024. You think that's a bit of too pessimistic a scenario?
Well, I'm not sure. I'm a price taker. My company, I have a break-even post-dividend under $50, so 70, 80. No, I think there is today supply and demand. There is a volatility in this market for sure. But it's good to have also some supply. And for consumers, it's also good not to have a price which is too high. Yeah. Clearly, in France, when the reach gasoline price at €2 per liter, people or consumers are very unhappy, and we put a ceiling on the price to try to tackle these high prices. So I think even for the oil market, when you have high prices, it's not too good. Having said that, it's good for the climate, because when you have high prices, you force people to save.
Yeah.
And it's good for all this COP28 and this discussion. Again, it's a matter of doubling efficiency, all that. So the price has really an impact on the behavior of consumers.
Well, that was our exclusive interview with Patrick Pouyanné, the chief executive of the French oil major Total Energy. Now, coming up, we'll have plenty more from COP28. The Bridgewater Associates founder, Ray Dalio, says the world is unlikely to achieve the climate pledges set out in the Paris Agreement. We'll bring you his take next, and this is Bloomberg.
Let's be realistic. We are unlikely to achieve the 1.5 target. So there are three things. What you can do to achieve the 1.5 target. The second is adaptation. Okay, if you don't achieve the 1.5 target, what needs to be done to make that acceptable? Of course, the consequences of not doing that are big. Big migration, all sorts of problems. But how do you adapt? And then the third cost is the cost of the damage. I believe that we're going to be moving in an economic way to adaptation. And that there's a lot of, that'll have a great power. And the reason is it affects everybody. So whereas there's an element here of let's be good and get the money. But if you go to, let's say, banks, they say banks have a lot of money. But banks have assets and liabilities. And if they don't receive or give their depositors or those who are putting money with them an adequate amount of return, they won't have any money.
Right.
So you still have to have the return component of that. What happens is self-interest is a great motivator when you have that. And I think adaptation will be some area for probably great investment and great productivity.
But Ray, isn't climate change the biggest risk really to any company? And so when do we see regulation that forces every company to look at it as the longest, biggest risk out there?
Well, I think Secretary Kerry did such a wonderful job of describing the realities of that. I mean, I think that's the balance. And so as a very practical person, one can't say it's going to be all or none. One has to look at actually what is it, what is happening. And I think as you're dealing with the regulation, that's right, that's good. And then there's also a meme developing that you're not a good citizen. Okay, that political aspect also plays, social aspect, meme, plays a role. Are you doing it well? Is a social pressure that has a role? So there's regulation, there's social pressure. Those are all good things that are helping. The real question is that enough? I mean, it's not like you have them or you don't have them.
Well, that was Ray Dalio, the founder of Bridgewater Associates, really talking about the transition, saying that even if we're unlikely to achieve the 1.5-degree climate target as outlined in the Paris Agreement, he basically says that we are on the way there, so that the trend is still towards decarbonization, even if it hits bumps along the road. Now, here are some of the other top stories from today. Of course, we look at everything that's happening in markets. One of the other things, which is a very interesting conversation here at COP28, which is climate change and the funding of climate change, is we saw Altera. Now, this is a huge fund. Brookfield, we were speaking about it with Mark Carney. Brookfield, together with the UAE, actually trying to find projects with on both sides, a lot of money being poured in. I think it's around 30 billion plus. Now, coming up, Kleinman, the co-president of Apollo Asset Management, joins me here. We're live from Dubai at COP28. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua in Dubai for COP28. We're at day 4. A lot of investors tired, but actually they keep on going because they know there's money to be made in certain parts of the markets with the green financing. Now, we're just getting some breaking news from the London Stock Exchange. We had a communication from them that they're investigating an issue impacting trading. Now, this we understand through just their press release moments ago, saying they're investigating an issue with its trading and information system. So we'll, of course, keep a very close eye on it. They say they're undertaking some immediate analysis and will give further updates through its live service portal. So if you're a trader at the moment, hold on tight. We're told by the London Stock Exchange that they will, of course, update you with anything that's happening, and you can always tune into Bloomberg because it will bring you all of the latest updates as well. Now, back to COP28, and the IMF has called for more ambitious policies and innovation globally in order to meet climate goals. It says that in order for nations to achieve net zero by 2050, private investment is crucial, especially in emerging markets. So what role does private credit play in progress towards meeting the goals in the Paris Agreement? Well, one man knows the answer. He is Scott Kleinman. He's co-president of Apollo Global Management. Scott, great to have you here.
Thanks, Francine. Good to be here.
So this is the money question. What role do you see credit doing in all of this?
Well, it's massive, actually, right? If you just take a step back and think about the amount of capital required to achieve decarbonization, right? The world's talking about decarbonizing by 2050. That's going to take somewhere between $200 and $300 trillion to achieve. That's more than $1,000 a year for every man, woman, and child on the planet. Governments don't have that much money. Companies don't have that much money. And so that's going to have to be supplemented by private capital. Private capital in venture form, but also in equity, in credit, in infrastructure. It's just a massive, massive need for capital.
But Scott, so first of all, is that capital available? Is it going to be taken from somewhere, or will that capital be available when we have more viable projects?
Yeah, look, I think it's growing as we speak, right? Thus far, when people think about climate investing, they often think in terms of venture or really new technology. But the reality is the bulk of the $200 to $300 trillion that needs to be spent is in regular way energy transition. Industrial companies, auto companies, manufacturing, energy companies need to put the capital in. It's a very capital intensive process to convert from old energy, to new energy, new infrastructure. And that just takes enormous capital. That capital will be there as projects start to arise.
But so what kind of projects are you looking at? And is that like with some of the big development banks, is it the World Bank to kind of have an anchor, or are you going at it alone?
No, it really comes company by company, as it could be anywhere from a recent transaction we did with Air France, where we provided $1.5 billion private credit financing for them. a portion of which was used for sustainable aviation fuel, as one example. Another example, we financed a renewable energy developer with a $600 million project finance loan. So really runs the gamut of projects.
But I think you appointed a chief sustainability officer like 2 years ago.
That's correct.
Again, is that for like a big transition? Is climate and ESG and the change, I guess, in the economy going to filter through all of your investments, or is it going to be quite slow?
So think of sustainability as part offense and part defense. Defense is about getting your own house in order, taking the companies you own and just driving sustainability into them, whether that's part of the investment thesis or not. And that's what our chief sustainability officer focuses on.
Because of risk? So is this from just
because
a risk
of risk
perspective?
and because of opportunity. But then there's also offense, right, which is how do you invest in climate-oriented investments, sustainable investments, where you can create value going forward and have just very interesting, viable investment opportunities.
Again, from an investor point of view, do you think some of these opportunities will be slower or quicker than we think? There seems to be, we're at the start of money, but I guess at some point you could have escape velocity. So 30 billion, for example, in Altera could turn into, a template for other projects.
I think you're going to see this grow exponentially from here. Really, every year you're seeing more and more capital flow. Thus far, like I said, it's been concentrated in a lot of venture and technology investments. I think you're going to see the scale of capital grow massively into infrastructure, private equity, private credit, financing a lot of different aspects of sustainability.
Scott, what are you most interested in? So is it emerging markets? Is it, the U.S., there's a ton of money because of onshoring, because of the Inflation Reduction Act. Like, what are some of the key regions that you think this will accelerate?
Apollo's primary focus area is North America, Europe, and developed Asia, and that is really the areas that we focus on, and I would suspect the bulk of our sustainable investments will come in that area.
When it comes to climate tech, is there one big bet that you want to, or is it?
No, I would say there's no one big bet. Really, we need all of the above to happen. Everything from decarbonization in companies, carbon air capture activities, to hydrogen seems promising, but still years away from private investment in any meaningful way.
Give me a sense again, in terms of credit offsetting, this is something that Apollo wants to be a bigger player on. Like, how much bigger do you think that space will be? And would you give it to fossil fuel companies? How do you see that?
Absolutely, right? Again, this is all about transition. It's called energy transition for a reason, right? Traditional companies have to, little by little, evolve their manufacturing footprints, evolve their operations, evolve their products to be more sustainable. And that just takes capital. And so all of these companies are target opportunities.
How often do you think about the Fed? So markets obsessed with inflation, obsessed with the Fed. They think we're definitely getting cuts next year. Are they wrong?
I would personally bet against it. I think it's going to, the Fed has been very clear about staying higher than we think and staying longer than we think. And I think that's the right way to think about it. I think the market's a little too optimistic.
Okay, what does that mean for finding deals? I know Apollo has been extremely active in many spaces. Is it an opportunity as you see the economy maybe wobble a little bit in certain countries with question marks over debt?
No, I think actually higher rates ultimately are better for the deal environment, right? Higher rates mean more sensible valuations, less leverage on companies, and that actually jives very well with the Apollo investment strategy.
Are you seeing more sensible valuations? Because we hear there's still like a 15-20% gap between what owners want and what buyers are prepared to pay for it.
No, we are. It's been an incredibly busy year for Apollo. We've executed in our private equity business on about 9 or 10 transactions, over $6 billion of capital deployed. There are lots of companies that are just trading at more sensible valuations and are willing to transact at these valuations.
We're December 5th, so I feel I can ask you about 2024. Like, what are you most excited about next year? Like, where are the biggest opportunities?
I think 24 is going to be a volatile year. A lot of unexpected things geopolitically, economically, and volatility tends to be good for Apollo. We like the uncertainty. We like the opportunity that volatility creates. And so we think it's going to be actually a pretty good year for deployment.
Where do you see the most volatility? I know commercial real estate is the one where you have red alarms going off for 2024.
Yeah, look, I've talked about this before. I do think the real estate market in general is due for a pretty sizable correction. I think that's going to play out over several years, not necessarily on a date in 2024. But we're going to be prepared to play a part in that.
So meaning that when refinancing comes and people will sell the distressed assets, you could be a buyer in some of those
or just providing capital to companies that need to refinance. Sometimes it's a restructuring. Other times it's just support capital, deleveraging capital for companies, for real estate, for otherwise.
Scott, what do you think the market is getting wrong right now?
I think the market is too optimistic on the outlook for 2024 fundamentals, as well as the interest rate cut environment, which I think the market is just way too exuberant about.
Scott, thank you for joining us. Scott Kleinman there, the co-president of Apollo Global Management. Now, we'll have plenty more, of course, throughout the day here from the Green Summit at COP28. Also, we have an update from the London Stock Exchange saying only FTSE 100, FTSE 250 and international order books are now available for trading. So I know this is something that if you're at your desk trying to make a trade, it's something that you'll watch very closely. Again, they said moments ago they were having issues with the trading information system. We'll have plenty more from COP28 coming up. We speak with Mark Carney, the chair of Brookfield Asset Management and UN Special Envoy on climate action and finance. He's also playing the part at Bloomberg. He's coming up next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua in Dubai for COP28. Now, Mark Carney, chair of Brookfield Asset Management and UN Special Envoy on climate action and finance, spoke to me about the UAE's plan to put $30 billion into a new climate finance fund.
First is to respect what the UAE is doing. $30 billion dedicated to transition finance. It's a huge amount of money. But especially important, as you say, for a new template, they put out a new template for finance in the emerging and developing world. So a substantial portion of that $30 billion is catalytic finance. It comes in at a different return threshold. It's focused on the emerging developing world across everything from technology to clean power, sustainable living, and we're thrilled to be a part of that. Combined, we have a partnership with Altera, the new vehicle, where they're putting in $3 billion across our transition strategies. We expect to have over $20 billion raised and focused across the emerging developing world and transition more broadly.
So where's the smart money going in terms of that transition fund? Like, what are the hot projects right now?
Well, I think, look, it's a wide range. So one of the focuses of this COP, as you know, is to triple renewable capacity. So think solar and wind and battery storage, conventional, if you will, renewable technology. That's been growing exponentially around the world. It needs to keep going. We see enormous opportunities in those regards. Just again, to bring it back to Brookfield for a moment, our deployment rate is about 7 gigawatts a year. So we're growing at 7 gigawatts. We already have over 30 gigawatts in operation. We have 140 gigawatts in our backlog. We're pushing that out. With respect to the emerging world, that new fund, we call it our Catalytic Transition Fund, so it's an emerging market, developing world focus. We've identified 6 gigawatts of projects already. 1.2 gigawatts will be deployed there. But that's just one of the opportunities. The other big opportunities, you say, where's the smart money going? The smart money now is rushing towards where the emissions are. So we're thinking heavy emission sectors, if I may. So that's transportation, that's chemicals, that's steel, and it's getting those emissions down because you can come in at a low valuation, you're solving a big problem, and you're having both a high financial return, but for the planet, you're having a high emissions return as well because you're getting a lot of carbon out of the atmosphere.
But is there a danger that so we also have this loss and damage fund, which is basically transferring money to emerging markets. But I was looking at numbers of onshoring in the U.S. I mean, we're talking like millions of money going into the U.S., partly because of onshoring, partly because of the Inflation Reduction Act. So how does that change things?
Yeah, well, so loss and damage is dealing with a separate issue, if I can say. It's related to climate change, but it's the impact of what's happened historically. So it's an issue of global climate justice. It's not really an investment set of issues. But as you say, there are many things happening. And with the IRA, it is attracting a lot of capital into the United States. Look, the U.S. has to get emissions down as well. And the world will benefit from what's happening in the U.S. because it's driving down the cost curve for new technologies, hydrogen, carbon capture and storage. I mean, these are existing technologies, but they haven't been commercial at large scale. The IRA benefit and the amount of capital, and we're very involved in this, amount of capital that's being deployed is going to lower the cost of those, just like the UK did for wind technology. The whole world benefits from that, as they will with the IRA.
Well, that was Mark Carney, chair of Brookfield Asset Management and UN Special Envoy on Climate Action and Finance. He's also the chair of Bloomberg. Now, here are some of the other stories that we're keeping an eye on, of course, today. We start with Israel. Israel's military is expanding its operations further into the southern Gaza Strip, with reports of strikes hitting Khan Yunis, the territory's second largest city. Now, the stepped-up fighting comes after increased warnings from the U.S. to limit civilian deaths. The Hamas Foreign Health Ministry reports over 15,000 people have been killed since Hamas attacked Israel. The Kremlin is reported to have confirmed that Russian President Vladimir Putin will make a rare trip abroad to the UAE and Saudi Arabia tomorrow. According to one Russian report, Putin is expected to meet with Saudi Crown Prince Mohammed bin Salman. And Hungarian Prime Minister Viktor Orban has again warned that the EU against discussing the start of membership talks with Ukraine at a Brussels leader summit next week. Now, Orban made the demands in a letter to the European Council President seen by Bloomberg. Unanimous support from all 27 member states would be required for Kyiv succession. Coming up, the U.S. Special Envoy for Climate, John Kerry, warns of the monumental dangers of climate change at COP28. More on what he had to say next, and this is Bloomberg.
The dangers that we are facing, folks, and I am not an alarmist. I think most people know I've been pretty practical in trying to find solutions to challenges. But the dangers we face now are just monumental and even scary. And scientists are saying that. The best scientists in the world are saying what we face now is alarming, terrifying. These are quotes. And even we are in uncharted territory. Now, let me just say to you, it was 70 degrees Fahrenheit above normal in the Arctic last summer. It was 100 degrees Fahrenheit above normal in the Antarctic. And a massive ice sheet that has been tied up for whatever thousands of years, because it was so big and heavy, it was stuck in the mud, has now disappeared enough, melted enough that it floated, it's no longer stuck. It's moving out towards Georgia Island. It's going to melt. Just like 86 million metric tons of ice every single day in the Greenland. So we got to really decide, are we serious or are we fooling around with an existential issue? Existential. You hear that out of the mouths of sober politicians who are not playing politics, who really understand what's going on. So I do that as a preface because it has to be the guideline, the guidepost for everything we're thinking about and choosing to do. And the fact is, emissions are going up in too many places. And what the science says is, IPCC 2018, they could not have been more clear. They pointed the finger at all the people in positions of responsibility. You have 12 years within which to make the decisions and implement them, obviously, that will avoid the worst consequences of the climate crisis. That's science, mathematics, physics. And we're ignoring it in too many parts of the world. And so we're inviting the worst consequences. And we see what's happening. 18 $1 billion events in the U.S. climate events last year. 18 $1 billion separate events. Meanwhile, 30 million people displaced in Pakistan. Record fires in Greece and parts of the world. Come on. When do we get sort of, really focused on this?
Well, that was the U.S. Special Envoy for Climate Change, for Climate, John Kerry, speaking at COP28 with our very own John Farrar. Well, let's get more on what Kerry said in that discussion with our head of Green, ESG and Equality, John Farrar. John, it was a fantastic conversation. Also, he was fired up, and he was also quite funny. I mean, the room really couldn't get enough of him.
I mean, he left with a mic drop moment. He was in great form. You can see how he was very nearly president of the United States. He had this clear magnetism on stage, but he also had, he was in robust form about the need for action at this COP. He was defiant in the face of criticism about U.S. policy. He had a lot to say. Yeah,
so he kind of went after Trump. We were expecting that, but he also kind of went after Chevron.
That's right. So one of the big stories of this COP has been how fossil fuel companies are coming into the mix. And of course, the US was a big part of this methane announcement of the weekend, where 50 big oil companies signed up to it. However, Chevron, they're not contributing money to this methane fund that's been set up. And Kerry he didn't really hold back in terms of how Chevron in particular needs to do more. It's quite rare for such a senior US official to specifically call out an individual company. So it'll be interesting. We have calls in to Chevron to see what their reaction is, and it'll be interesting to see what they have to say to that.
I mean, the big debate is whether the phasing out of fossil fuel will end up in the final communique. Does it really make a difference for the climate agenda?
So there's two schools of thought of this. On this, I mean, words matter. The Paris Agreement was just words on paper, but it did have a huge, impact over time in terms of sending a signal to the market that the energy transition is real. There is another school of thought. I think we had someone from KKR on one of our panels yesterday making the point: communiques don't spur investments. Right? Investments are, if I think I'm going to make money from this, I'll invest money. So. There is this sort of debate over this, but certainly for the next 10 days here, this is the only thing that people are going to be thinking about. Climate diplomats like Kerry do believe passionately in these communiques. And the big question is, will this communique, will they agree, will they get everyone around the world, all these countries, to agree to a phase out of fossil fuels, which if it happens would still be a big moment in climate diplomacy.
Yeah, but you're right, it has to be unanimous. It's so tough to find that. And then, I mean, in the last hour we had this pretty incredible news actually. Interfax, which is a Russian news agency, saying that the Kremlin has said that Putin will visit the UAE and Saudi Arabia tomorrow.
So we're still reporting that out to see, is he actually going to come to COP? That would be a rather incredible moment. It would certainly further complicate the whole fossil fuel question if he were to come here. But this is literally breaking news, so we'll have to find out more. But it is interesting. He hasn't left Russia that much since the war started. Again, it's just an example of how he's feeling increasingly emboldened as the war in Ukraine goes to a stalemate.
We'll be watching that very, very closely. I know our team are, of course, making calls as we speak. That was John Farrar, head of Green, ESG and Equality for Bloomberg. Coming up next, we'll have plenty more from COP28. So we're just getting started. It's like we're day 5 of COP or day 4, and we have another 8 days to go. This is Bloomberg.